Hi fellow traders, I'm going to illustrate a buy scenario at GBPUSD. Whenever I consider trading any currency, I always compare many currencies against each other to determine which currency pair I have to trade. As per what I said in my previous analysis, that Japanese yen and Swiss franc have been losing. They can be the weaker currency against which GBP can be bought, but I'm not buying GBP versus Japanese yen or USD CHF because both of those currencies have already lost enough that they can gain a little for a purpose of correction. So I'll focus on GBPUSD. I'm going to explain and illustrate my bullish scenario, as well as there is an alternative scenario of selling GBPUSD, but I'm not going to trade GBPUSD in the short side because I'm already expecting upward retracement in Euro USD, which means I'm expecting that USD will lose a little for the sake of correction in Euro USD. Euro USD is a major factor to which impacts US dollar index. US dollar index is up to 90% directly proportional to reverse of Euro USD. I mean USD Euro and USD index is proportional. So what I see on this chart right now is a buy opportunity above this high. You see this high? This looks like a slower movement than this movement, but here only the speed of fall or rise is not the basis of making my decision. I'll show you the picture what is happening here. If market breaks above this high and 1 hour candle closes above this high, we can take buy position and we can target 127.2% of a possible butterfly. So this is a possible butterfly which now I'm going to draw here. So I'll take this shape of triangle here. First of all, let's determine the target of butterfly by plotting Fibonacci here. So here I go. Sorry, I plotted a wrong tool. I'm new to this platform, so I keep making mistakes, but don't worry, I will learn soon. Here it is, Fibonacci retracement. So I am plotting this from that high to this low, and the butterfly will be made something like this. Shape. Just give me a few minutes. All right, and lock it. And if the butterfly will be formed, the second part of the butterfly will be something like this. And this will go to the upside. Let me draw now Fibonacci to understand where will it go. Now let me lock this. Locked. I am contracting the chart to see where will it go if butterfly will be formed. This is showing 1.618, but this is not showing 1.272. The nearest completion point for butterfly is 127.2%, extension to the upside of this downward move. So I will have to edit this. Right click, settings, Fibonacci retracement. I'll just remove, add one. Instead of this 2.618, here I will add 1.272. okay, so we got this level 1.3011. this is 1.30. so look, there is no fixed formula where butterfly will complete its formation, because butterfly is a reversal pattern, so it can either become 127.2% butterfly, or even it can go up to this 1.618, that is 3062 level. But this level is not more probable just because it is 1.272 of the butterfly. It is also more probable because this is coinciding with the previous high of GBPUSD made on the daily time frame already. So we will keep this chart just like this, and we will switch to the daily time frame. There I will show you, remember this 1.3011, 3011 area is the high of high on the daily time frame. The high of this candle, let me one more second. $30.11 was the target completion point of butterfly, and the high of this daily time frame, as you can see on the chart. Let me move chart like this. All right, so this is the daily time frame, you see, and the high of this candle will show the high of this daily time frame, that was 3013. see here a high and low is displayed. So if I keep my pointer here, 3013, so that just a 2 pip difference. That the completion point is 3011, and previous high is 3013. so this is more probable. So this is one scenario, and now I'm going to illustrate the alternative scenario. Going back to 1 hour time frame, why I'm targeting not beyond this this top is probability of downside retracement after moving such a sharp after making such a sharp upside move on the daily time frame. Majority of the institutional and professional traders will be expecting a retracement to at least 38.2% of this entire move up on the daily time frame, and market has barely retraced to 30% level. This was around here was 30% of the entire move up, this entire move up on daily time frame. So there is a probability that market can go down and reach at least 38.2% level. So this can still happen even if it goes up to this 3011 area, and it can return back, and then retracement can happen till this downside till like somewhere around this area 38.2. so this is one probable scenario. Another probable scenario is downside retracement right from here where the price is now. So going back to 1 hour time frame, so probability of the buying scenario is only possible if market breaks above this, which I have explained. So now I'm going to delete all these objects and going to show you the alternative scenario. I'm not trading the alternative scenario because I'm expecting something else, which I already told you, but every trader is different. His ideology or her ideology is different. So, and anything can happen in the market, any scenario can go wrong, an alternative scenario can take place, which is why it is necessary to look at the alternative picture. It is necessary to ready to exit in the loss if the scenario which you are trading goes wrong. So alternative scenario says that market can keep falling right from here, and it will not break this level. If it will not break this level, then something else will be made, which will be a downward butterfly, and that is coinciding with the daily low. Even if market is supposed to stay in a range on daily time frame, the range means going back to daily time frame, 1 second. Okay, I have to vertically contract this. All right, now it is working. Okay, so after this sharp movement, where when all majority of traders are expecting downward retracement, it is not necessary that downward retracement can take place today. Maybe it will be ranging between this range, something between this point and this point. Market can stay inside, and this low is 1.2794, so it can stay between 13 and 27.69. So my alternative scenario, which I'm going to explain now, is making an agreement with this 27.69, this low. So going back to 1 hour time frame now. The butterfly which I am expecting here will be something like this. Let me draw that. This is the one left side of the butterfly, the triangle, and the right side will be something like this. To understand the completion point, again I will take Fibonacci here and will draw this. And this time this butterfly is not going to be completed at 127.2, because 127.2 is very small target, and that is not coinciding with the previous low. So there is big chance that if the move will happen, because already daily trend, 4 hour trend, 1 hour trend are bearish. All these trends are bearish. If you plot MACD predictor on the chart, all these trends are bearish. Even if you take some other indicators, all these three time frames are bearish. Daily time frame, as per some other indicators, are not bearish, but I don't use other indicators. What I use is just this one, the Napoli MACD predictor. Many people already have liked it, 1072 likes. So as per this, if you see the price below this, it means the trend is down. This one, now it is just right now it is up, but if it will start falling right from here, if it will not go up, then trend is bearish even on 1 hour, and already it is bearish on 4 hour and daily time frame. Like if you see on 1 day, this is where the Napoli MACD predictor is, price is way below it. On 4 hour, also price is below it. So this scenario can also be can take place, but if it take place, it will be faster than the upside movement. That is why it will be faster, because all trends are bearish. And if it will be faster, 127.2 is very nearest target. I mean, it is very insufficient target for such fast move. That is why 1.618 will be the completion point of butterfly. This is the one reason. Another reason is 1.618 of the butterfly, that is 2765, is coinciding with the low of the daily time frame. Daily time frame low was 2769, just a 4 pip difference. If you remember, going back to daily, this low is 127.69. All right, so this is another scenario. And one more factor is making agreement with this butterfly, previous low, as well as ABCD. I'll show you which ABCD now I'm talking about. The part, this ABCD is the part of butterfly, this extension from here, A, B, C, D. Let me draw this ABCD expansion. So I'll go here, and then I'm drawing this Fibonacci trend-based Fibonacci extension. So this will be something like this, here, A, B, C, and then look for the D. Contract the chart. Oh, I'm sorry, I made a mistake. I'm not considering this ABCD. I am considering bigger ABCD. From this point A, B, I will take this entire move, this move as the A, because this is the actual top market. If we horizontally contract the chart, then you will see this is the major swing. A, B, C, and this D. So this this entire butterfly can be the CD leg of this ABCD move, this A, B, C, and D move. So here I am going to plot Fibonacci extension. Mistake. A, B, C, and look, this is the point where butterfly and this ABCD is coinciding. 1618 of butterfly is coinciding with this ABCD. This is the 100% of ABCD. A, B equal CD. Even if you want to just look another way, you can just plot a trend line like this. Just delete this one and let's plot a trend line, and you can determine the AB equals CD. This is the size of AB, and let's drag it here like this, CD. AB equal CD. So this is exactly at 1.618, 2-3 pips difference. So this area is also important. Now everything depends on the current price action. Now we have a scenario to the both side. What happens? I'm not going to trade the fall scenario right now, because I have already taken buy position in Euro USD. No, I'm not taking buy position. I mean, I had suggested that Euro USD will retrace to the upside, but I had suggested that the scalpers can take buy, and at a certain point I have suggested to sell after upward retracement. So when I'm already expecting that USD will lose a little, and there is probability of correction in AUD USD, Euro USD, and Euro USD is a very significant thing which is affecting dollar index up to 90%. That's why I'm not taking the scenario. I'm taking the scenario to the upside. So this can be a probable scenario. If this is looking more suitable to you, you can go for the sell. And if you are also on the long side, just like I am, then let's buy here. Buy if this 1 hour candle closes above this point. So and then now if we are going in the buy scenario, I have explained the target, but I will also explain when to move. If it goes upside, here we take the buy position. After if the candle closes above this point, we take the buy position and market moves up. So obviously the stop loss will be below this point. Not below this point. Stop loss will be below this point, almost 5-6 below this point, because if it goes up here, we take the buy position, market returns right back and break this low, then obviously our buy scenario will be invalidated. So this is about the stop loss. I have explained the take profit already. So now I have to explain one point which will give you the scenario for moving your stop loss to the break-even point. So let's delete all these tools, remove all, and go for this. I have 1 minute to explain this, because this video is already reaching 20 minutes. Fibonacci retracement. Here I'll draw. Maybe it can be a ABCD retracement, and then market can return back from 78.6. So it can be like A, B, C, and D point here, because 61.8 has already been hit. So next level is 78.6, this level. Okay, so if price hits here, you should move your SL to BE. So if price will return from here, you will make no loss. That's all, guys. Thank you for watching.